Welcome everyone and welcome to the Money Control live stream, and of course good morning everyone. You are watching Markets with Santo and CJ. Well, Santo, yesterday a big event, of course, RIL's 45th annual general meeting. A lot of headlines to pick out, from that event. Of course, you had the succession planning, you had of course the new energy plans. But I think what stood out to me was the plan, and it sort of went under the radar, is the entry into the FMCG space. Now we know that Reliance Retail sells a lot of private, product or private branded products on its own organized retail, chain. But now it wants to venture out and take it to the, masses, take it to the public. And clearly this is something that is going to again disrupt an industry which gets disrupted probably every day, which is the FMCG space.
Well, at the time of the launch of JioMart itself, Reliance had sounded the bugle that its entry into the FMCG segment, beyond just being the provider of those, that was but in the making, and now it's out there very clear.
Clearly, and I think, Santo, it's a very interesting, phase in which this is coming, because let's not forget that the FMCG space only just recently has started finding favor with investors. Though over the past 1 year, this has been a sector that has been marred by high raw material prices, valuation. A lot of people are very skeptical about paying such high PE multiples, because growth, if you look at overall, has been slowing down in terms of top line. And of course, majority of the growth is also flowing towards the bigger players, whereas everybody else in the industry is sort of suffering a little bit. I think Reliance's, entry into this space, and the fact that it is RIL, which has deep pockets, could trigger a new wave of disruption and new competitive, era within the FMCG space. I think market has already been concerned about valuation, and Edelweiss now feels that going forward, at least for companies such as HUL or a Britannia or a Adani Wilmar, this could probably compress their valuations in the short term at least.
CJ, I would like to look at it slightly differently. Now, this is going to be a long-drawn battle. Of course, in the short term, clearly, you could have sentiment for FMCG stocks being impacted a bit. Part of the reason is also that most of them are trading at fairly high P multiples, and so there's likely to be some concern about that. But let's also look at it the other way around. Beyond the immediate sentiment knock, probably again people will, investors will try to reassess the situation, and like we have seen in the paint sector at the moment, just when Grasim had announced that it's getting into the paints business, suddenly you had investors targeting others. The incumbent paint company saying that the multiples could undergo compression, there could be margin pressure and all those things. So for a few days you did actually see that, but if you again then look at it over the last month or so, you've seen most of these paint companies, in fact all of them, posting fairly good returns. At least for the time being, the concerns seem to have blown over. Again, once you see concrete steps by Grasim and the kind of steps that, so once you see that it's actually put into motion its plans and it's entered the segment formally, that is when you might again see the second round of reaction there.
I think Santo, but the only difference here would be that that is Grasim and this is RIL, right? And whenever RIL wants to get into a space, it usually would want to go for the top spot. That is just in the nature and the DNA of the company. So in that sense, I think probably this is not a startup or a new D2C brand which is up and coming and of course has ambition but may not have the backing to do it or the capital to do it. In the case of RIL, it has both capital as well as the ambition.
Point taken, but it also remains to be seen which are the segments that RIL will target.
That will be very important.
So that is where the market will start differentiating.
Because of course, FMCG is a very diversified basket. Exactly. It's not like every company is in every product. A lot of companies have their own distinguished and differentiated products, so it will be very interesting to see. I mean, according to Edelweiss, the opinion is that they might go for more commoditized products, such as your pulses and others, those sort of entities, where already I think RIL has a private market presence because of its organized retail chain. So it will be very interesting dynamic. But clearly, this is that era where almost every industry is not been spared by disruption and disruptors.
We've seen that. We have seen Amazon doing that to
absolutely.
Other industries.
And here we of course have not only startups but also the big wigs such as RIL and Adani. So that said, let's quickly now move on to how the trade setup is today, and it is looking like a good picture this morning. Yesterday we did have a massive sell-off, about 1.5%, but it looks like bulls are trying to make a slight comeback. If you look at the SGX Nifty 50, it's indicating about a 40 to 50 point jump on the Nifty index this morning. Wall Street, however, the handover from US markets was quite negative, although the market was largely range bound throughout the session, but in the last half an hour, it gave up a lot of its position and ended sharply lower. Now, the rate hike concerns, we talked about it yesterday, Santo, that clearly remains. But I think the added pressure now for our markets could be the fact that oil prices suddenly seem to be rebounding. Now we are almost sitting on $103 per barrel on the Brent. Yesterday, oil prices jumped by about 3.5%. Clearly, the OPEC meeting that is upcoming, there's a lot of buzz around a potential output cut going ahead. So let's see how that develops. But this could again be a cause for concerns for the bulls.
Well, yes, clearly the focus now has shifted from rate cuts, possible rate cuts, to back onto inflation and the kind of impact that it could have. Now, the argument for long has been that India is still better placed compared to other markets. But if you look at it the other way, sustained weakness in the US and European markets also does not bode well for us over the longer term. Clearly, there is going to be some impact through the trade channels. The weakness in other markets is likely to feed into our economy also. Besides that, you don't have valuations being exactly cheap at this point in time. They are at best, one would say that they are reasonable. So that being the case, you have weak global markets and you have just about right valuation. So where's the room for the big upside, CJ?
Well, Santo, actually, yesterday I was reading this quote by a report by actually Kotak Institutional Equities, and they said that market was only pricing in the good bad news, which was that if there was a slowdown, there will potentially be rate hikes, and we know that the market loves rate hikes, right? Over the past decade, rate cuts have been loved by investors. But the bad news, wherein there is a growth slowdown, and of course during a period when central banks are hiking rate, that is something that the market had altogether ignored. Maybe now, after Powell's speech, maybe investors will be forced to look at that aspect, and that is why, and this is going to come at a time when valuations had already run up, given the fact that we had rallied up almost 18% from mid-June. So clearly, very dicey times for investors out there, given the fact that a lot is now happening on the macro setup.
Well, with that, let's dive into the stocks that are on watch list this morning, starting with Escorts Kubota. Strange, CJ, there's a flood of negative reports on the stock till about a few weeks back, and you still have the stock making a new high, and that too in a very bearish market. Indeed surprising. The thing here is, at this point in time, is that the big worry for those tracking the stock is that the company has lost market share during Q1, and it's going to be a long drawn battle to regain market share. So you could see some bit of technical factors pushing up the stock in the short term, but to regain that market share, very clearly Escorts may probably have to go in for more price cuts, which means that further pressure on margin. It's not looking a very pretty scene at this point in time. Its railway segment still has got a big order book, which is good. However, if you for Escorts, the big driver is clearly going to be its tractors business, and industry-wide the scene is not very pretty at this point in time, and inventory levels are also fairly high, although the company is optimistic that in the festive season demand should be strong. So this is a stock probably which might struggle to sustain these prices, I would say.
I mean, looking at the positioning, Santo, it doesn't seem like there's going to be any struggle. I mean, if you look at, yes, when the rally did start, Escorts was very badly oversold. It did see a lot of sell-off from probably around February onwards till almost mid-June, and since then the stock has, I think, rallied in line with the entire auto pack. I don't think it's been a singular rally or a standalone rally in itself. I think it has been rallying along with the auto pack. But if you look at the recent positioning also, traders have been continuously adding long positions to the stock, which suggests to me that probably the bullish momentum is likely to continue. Also, the stock is, there has been a crossover. If you look at on the technical charts, the 50-day DMA has recently moved above the 100-day DMA, which is generally a very good sign. If you ask technical analysts, they will always suggest that from a near or medium term perspective, that is a very, very good sign as far as the bullish momentum is concerned. And yes, on the fundamental side, tractor demand clearly is something to watch out for. Yes, the company is very buoyant about festive demand coming back, but some of the commentary we are listening from tractor financiers has not been that rosy. So it will be very interesting to see how that develops. Well, the first stock on my radar today, Santo, is BLS International, little known stock, but clearly making a big waves in the market. It has been a rank outperformer over the past 1.5 years. And yesterday, Nomura Singapore bought additional stake in the company through a block deal in the open market. Now, the stock overall, if you look at it on the technical charts, is clearly in a very, very long-term bull structure. Most indicators that you look at are giving you buy signals. So on that front, there are clearly no concern. Overall, from a fundamental perspective as well, it's a zero debt company, Santo, something that you might love. It's a zero debt company with very, very strong revenue prospects. So clearly, I think this is one stock that could continue to rise higher going ahead.
Well, no doubt about as far as the fundamentals of the company are concerned, but before I get into the counter argument, here's a quick look at the market, and it's a fairly strong start for the Nifty,
it is
almost 100 points up.
Yeah, better than what we were.
Good market breadth as
with.
well. 1770 stocks are up and 152 stocks are down. Mid cap 100 is also up by little over 0.5%. Nifty Bank is fairly strong in early trade, up 0.8%, and on the BSE 2 advances outnumber declines by almost 3:1.
But Santo, look at the surprising fact that India VIX is up by 9%. It's a big spike on the volatility index. The India VIX is now currently around 19.82 at this point of time. The small cap space is doing quite well, higher by about 0.7%. The mid cap, as Santo mentioned, is doing quite well. And if you look at sectorally, the entire NSE sectoral indices the entire pack is right now in the green. So it's been a very, very solid rebound. Let's see if it continues, because there will be a lot of people who will be waiting for a rebound like this to probably book some more profit or sell on the rise. But it will be very interesting to see if the market is able to hold on to these levels and we can probably regain that 17,500 territory. Then maybe, you know, a lot of the people who are sitting on the fence might just come back.
Well, yes, coming back to BLS International, CJ really can't really argue as far as the fundamentals of the stock is concerned. The growth in top line has been steady, I would say, at best. But what the company has managed to do is retain its margin and also grow its bottom line much better. So the growth in bottom line compounded over the last 5 years has been a healthy 17%. And a spectacular multi-bagger there. After the initial first couple of years of listing, the stock had underperformed for a long time. I think the bottom was made somewhere in March 2020, and from there the stock has almost risen more than about 15 times, and that's a huge jump there. So people, I mean, it's a classic.
Would I not want to be the guy who bought it in March 2020?
Yes, that's a classic. Once again, this is some of the lessons that market teaches you. So the first 2-3 years, the stock underperforms. You're almost tempted to throw away, but from there, it's a big rebound, clearly. And if you look at the position of BLS International, it's among the top 3 visa services providers globally. So and what surprises me, CJ, here is that despite so many things being in favor, you have not seen institutional investors so far queuing up.
But I mean, you have Nomura Santo coming in.
This is the first, and after a long time. Overall,
but HNIs are somebody who some people who have been actually getting into this trade for quite a while now. If you go to social media, I mean, you find a lot of people talking about BLS International. Clearly, a lot of high retail interest, HNI interest earlier, and now even institutions are, you know, taking note of this company.
Mazagon Dock Shipbuilders, good run up in the stock, is up about close to 42% over the last
massive month.
Yeah, the overall outlook on defense stocks at this point is very positive, and an added trigger for the stock was the announcement by the government on Sunday to include another 780 components and subsystems in the list of defense items that will have to be procured domestically. So these are the two short-term triggers, but other than that, if you look at the order book of Mazagon Shipbuilders, that's also pretty strong at 46,000 crores, which is almost 8 times its annual earnings. So you have earnings visibility there. In the recent quarter, the numbers were quite good, quite robust, and also there were some major order wins as well. It has won an order from, or rather 2 orders from Concor for building about 2,500 containers. So many things looking good for Mazagon Shipbuilders at this point in time. Again, a stock which tested the patience of investors, but of late a spectacular change in perception about the stock, CJ.
Clearly, Santo, I think fundamentals clearly are looking quite good as far as Mazagon is concerned, but I think overall the defense pack itself has become a overcrowded trade in this market over this entire 2022. I think the first sector that anybody would want to buy has been defense, and you have seen that in the performance of many of the defense companies that are listed in the market. On the technical side, Santo, I am a little concerned because the relative strength index, which is a momentum index, that has now almost moved above 85 for the stock and has been above the 80 mark, which is a overbought zone, basically the 80 mark for quite some time now. So I feel that probably going forward, you could expect a little bit of profit booking or consolidation. Whether the stock will probably see a massive correction, We don't know, but clearly some bit of correction might be required to cool off what seems to be quite an euphoric rise for all the defense companies, Mazagon included. The last stock on my radar today is actually another PSU name, and that is SJVN. Now, the stock was consolidating quite, for quite long, about 7 weeks of consolidation we have seen on the stock, but recently it has given a breakout from that consolidation, and clearly a lot of technical analysts and traders are jumping out on that breakout. If you look at the breakout itself has also happened on the back of very, very large volumes over the past 2 to 3 sessions. So clearly, it seems like there is something very good building up here. SGFC Securities came out, they have given a buy call on the stock, and they're expecting about 13 to 23% sort of return in the near to short, medium term on the stock on a technical chart basis, of course. Fundamentally, yes, things are looking up for the power sector. Clearly, SJVN itself is trying to get into the renewable space as well. So that is something that could be an additional trigger. But let's not forget, this is a PSU space, so there are always hiccups, always regulatory issues that can always come in. But clearly, the mood seems to be changing.
Well, CJ, this is one stock in the PSU pack which has disappointed investors right from the time of its listing. It's been 12 long years now, and the stock price has just not gone anywhere. Maybe it's very likely that market is so far not recognized what the company really is trying to do, stands for. But if you look at the number, clearly look at the top line growth over the last 9 years almost now, it's just barely about 50%.
I think Santo, that is also symptomatic of the power sector in general.
Yes, exactly. That is the reason the stock has underperformed, and it's very hard to think what can change for it suddenly. The good part is that 70% margins. The margins are quite juicy out there, but if the top line itself doesn't grow much.
I think, Santo, fundamentally a lot is changing for the power sector, especially with the electricity bill, amendment coming there after 19 years we are getting amendments in that bill. A lot of new things have been proposed there. The entire power sector market is changing. Power demand is rising. So clearly there are good tailwinds for the company to take advantage of. The only thing would be whether they can take advantage of those tailwinds or not. That would be the fundamental side, but clearly from a tactical point of view at this point of time, I think the stock is looking quite good.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of the screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a great trading session.